Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darcy here to bring you the daily recap. So today, the market was weak a little bit early after testing the 8-day moving average yesterday and showing a few warning signs that Scott talked about. We posted charts of the IWM, which is the Russell 2000 Index, the Home Builders, the XHB, and also the IYT, I think. Just a few sectors that were flashing some warning signs, flashing some signs that the market was a little bit tired after this slow grind up during the summer. It was no real red flag, and it's not something that I would really, didn't cause any alarm bells in my head, but it was something that maybe could point to a little bit of short-term weakness on the horizon. But today it didn't really lead to anything. Over the next few sessions, who knows? But today, market found its footing and the bleeding was stopped, if you want to call it bleeding. We can go take a look at the chart of S&P just to give you a visual of that. Like I said yesterday, we came down and touched this 8-day moving average on the S&P, which any market, any stock that holds above its 8-day moving average is extremely bullish, extremely healthy. The market did dip below it today early, but was able to close strong, to close back above it and finish the day in positive territory. So nothing really has changed from a technical perspective. Yeah, yesterday you got a little bit of a divergence from that slow grind higher that we've seen since those June 24th lows, but nothing really game-changing. Overall, the market's been quiet and a little bit lethargic recently. But obviously, the big news today in the market was Facebook, and this earnings report we saw last night, for me, came completely out of left field. And then the behavior, the price action overnight and today, obviously a huge change from what we've seen from Facebook during its public life. I've never been a huge fan of the Facebook platform. I've never been a huge fan of the fundamental story in Facebook. I've never been a huge fan of the technical story in Facebook. But last night, I think they could have flipped that all on its head and really changed the future for the company, changed the future for the stock. And obviously, a 30% gain today would reflect that same opinion that I just expressed. We'll take a look at the chart, and I'll explain a little bit more about that report last night. Look at Facebook. Basically, the company, the reason why they've struggled to make money and why a lot of portfolio managers and fundamental guys have been skeptical about the stock is that the company's always struggled to make money on the mobile side of things. And obviously, mobile is the future. The desktop ads, yes, those do make money, but the real growth potential people view coming from mobile ads. And Facebook's never done a good job of monetizing their mobile ads until, I guess, this last quarter. They figured something out, some light switch went on. The previous quarter, they made 26% of their ad revenue from mobile ads. This quarter, they made 41% of their ad revenue from mobile ads, which is a huge jump and something that is making people very optimistic that Facebook's figured it out and they're finally going to be a mobile ad growth revenue leader. And obviously, the 30% gain, almost 30% gain today would reflect that. We zoom out on the chart, and you can see over its public life, one thing we talk about is that a new IPO, the way it performs in its first few days is often a sign of the way it's going to perform over a longer term period. And obviously the Facebook IPO was botched by NASDAQ, by the underwriters, by all the investment banks that were greedy with the valuation. And Facebook got punished in those first few days, and it was a preview of what we saw in the first few months in Facebook as it dropped below half of that $38 IPO price. And even after that, it tried to make some moves to get going again. Like here, it was able to rally back up into the $30 area, almost to 35, but then it came back all the way down below 25. Every time you got some sort of uptick on Facebook, no matter the time frame, whether it be a daily, a 15-minute, a weekly, whatever, it would never provide you follow-through. And it frustrated a lot of traders for that reason, is that it just never provided follow-through, and it's not a stock that anybody felt good about or they felt like they could trust. But like I said, this most recent move has sort of flipped that on its head. I think portfolio managers, are going to be scrambling to get exposure to this stock on that mobile ad growth story. There are some shorts that could be squeezed, but this is not one of those highly shorted names that's just going to go up because of the short squeeze. So I think it's a combination of things that are pushing this higher. And yeah, maybe this run is a little bit too much, too fast for Facebook, and maybe could get a short-term pullback. But I do think Facebook goes higher from here. I think obviously a gap up and go is a very positive sign for a stock, and everything right now, based on those numbers last night and that report, tell me that this is going to get back up to its IPO price much sooner than it falls back down to the $30 area, for example. I think, in my opinion, you'll see a continued rally up to that $38 price point, like I said, before a retest or closing of this gap that we saw today. But really impressive numbers. That's what everybody was talking about today. And overnight, obviously, if you had any sort of options position in calls, you did very well. There's also some nice opportunities intraday to trade this stock. If you were in the momentum trading room, for example, or there were several other T3 Live contributors who were following this stock closely that gave a really good explanation in the virtual trading floor during the session about how you could approach this after the gap up. So that's the value in being in the virtual trading floor. I think it's a really valuable tool, not only to get analysis and things like that, but also to learn how to fish rather than just us throwing fish in your boat. But there was a few other notable earnings reports last night. Baidu was a big one, but it was obviously overshadowed by Facebook. Take a look at the Baidu chart. Big gap up. It was up around 15% last night. Not sure exactly where it opened this morning. I think it was even maybe higher than that, but didn't have the power during the session that Facebook did. It was volatile, a big range during the session. It closed off its lows and also off its highs of the day. So it'll be very interesting to watch going forward whether Baidu can hold the majority of this gap and maybe form another base to go higher. But a really strong move into the report, which showed that there were high expectations for the report, and then a strong earnings report from Baidu was able to push it even higher. We zoom out a little bit just to get some perspective on it. Still got some resistance levels and some room potentially to go. Obviously, it got rejected by this resistance level area today after the gap up, so that could be that 134 area could be an obstacle for Baidu going forward. But like I said, look for a potential base if you want to get involved there, and then look at the rest of the Chinese internet stocks. Those also have been waking up and performing well in recent weeks and could be a source of strength after you saw these great numbers from Baidu. TripAdvisor is not one we generally talk about a lot, but also a notable move today. Big gap up. We go to the daily chart to get a look at the gap. Big gap up today, and it looked a little bit more like the Facebook chart, so very positive for TripAdvisor to gap up and then surge off that gap. You zoom out completely on TripAdvisor, it's a newer issue as well. You talk about performance in the early stages of a new IPO, maybe giving you some foreshadowing on how the stock's going to perform. Right after the IPO, if we can get a better look at this on the daily chart, it performed pretty well. It opened for trading, basically traded around in a range and has rallied off of its initial IPO price from back in late 2011. But TripAdvisor is held in relatively well above that or near that IPO price, and now it's making all-time highs. We go to the monthly chart, you can see above $70. Really constructive action today for TripAdvisor. It's not one that I'm really familiar with the fundamental story on, but good price action. Another one that if it performs a base, it could be another one of those stocks. Gap up in base, that's a pattern we love and the one we teach a lot in our active trading course. That's an A+ setup for us. Visa, another one with a strong earnings report today. It seems like these credit card companies can do no wrong right now. It's hard to chase them after these monster moves they've had over the last few years, but it seems like every upper level base that Visa, MasterCard has also been doing well, but Visa in particular, very consistent. Feels like every time they form an upper level base, they break higher out of that base, despite some choppy action for long periods of time. But as you can see in Visa, it was weak the last 2 days heading into last night's report, but then the report was very good. A gap up near the top end of this range, and then an acceleration of momentum for a breakout. It did close a little bit off its highs, but really healthy action today in Visa. And like I said, we can zoom out to get a picture of that. I think a lot of people will be kicking themselves for not loading into Visa during the market lows in 2009, and there was plenty of opportunities beyond that. Stock's almost at $200 now, and it was down in $50 area during those market lows in 2009. So that was obviously a tremendous opportunity, and you see this really steep uptrend that Visa has just been stair-stepping higher. Talk about a model of consistency. Visa has been that, and another impressive move today for that stock. We'll take a look at a few other high beta tech names just to take stock of what we saw, and then I'll take a look at a couple ETFs. Apple, everybody's been wondering whether, it's been sort of like Facebook that you just haven't gotten recently commitment to the upside. So when you have seen a gap or you have seen a rally, Facebook hasn't been able to build on it. Had a nice gap up on this most recent earnings. Today was sort of lethargic. Nothing really noteworthy on the positive or negative side of things, but continue to see if a base builds in Apple and see if it can build on that gap. Google, weak today, a gap down and wasn't able to rally back into the gap, so maybe something to take note of, that money's rotating out of Google and perhaps into some other tech names. You could see the thesis perpetuated now in the media of, oh, people are going to rotate out of Google and into Facebook maybe. Facebook has installed their graph search now and things like that, and they're putting more ads into people's news feeds, and they're able to get higher prices for those ads because of the high usership on Facebook. So Facebook and Google definitely big competitors, and you could see a little bit of that dynamic in play. But now we'll take a look at a couple ETFs. Like I talked about, that IWM, the Russell 2000 ETF yesterday, showed some weakness, maybe a sign of caution Scott talked about, but it was able to rally impressively back, show really a lot of relative strength to the market today, and almost erased most of yesterday's losses. So really impressive action there. Not every sector was able to do that, though, so there was some divergences between sectors today. XHB closed well off its lows, but was weak overall, gap down, wasn't able to fill any of the gap. Like I said, closed off its lows, but not healthy action there, and I'm not a huge fan of the home builders, largely due to the fact they're below their 8-day, 21-day, and 50-day, and 100-day moving averages. The only moving average below supporting the stock is the 200-day, which would look to be a natural magnet for the XHB, perhaps as this summer market gets a little bit tired. The IYT, we'll glance at that one too, if I can get it up. IYT, weakness followed through in the morning today, but was able to rally back. You saw the XHB close well off its lows. The IYT was able to come back and erase all of those losses. So somewhere in between the IWM and the XHB, it's above its 21-day, but below its 8-day, which is curling down. So, like I said, a little bit in between those two other sectors. And for fun, let's go to the 5-minute chart, look after hours at a few earnings we had after the close today. Amazon. Our time templates, we have a 24-hour template up here. You can see Amazon came out with another report that on the surface did not look very good, and then you had all the jokes on Twitter of, wow, was Amazon's report bad enough that it's going to rally to 400 and blah, blah, blah. It seems like Amazon gets a pass every earnings season. They come out with numbers that are unimpressive. The company really doesn't make money yet, but each time there's something in the report that portfolio managers or hedge funds latch onto as a sign that everything's on track for Amazon and that future growth story is still intact. But it's really impressive to look at the chart, and you saw an initial huge downtick of about 18 to 20 points in Amazon, but it's rallied almost back to the flat line. So you'll continue to see that, all those jokes on social media and the blogosphere tomorrow about everybody hating on Amazon because it doesn't make money but it still stays up. And we're not really that concerned with all that. We're concerned with the price action right now. Amazon continues to shrug off what appear to be somewhat lukewarm at best reports, or mediocre reports, honestly, and continues to hold up technically. We'll take a look also. What was some other ones that reported after the close today? I'm completely blanking because I was just watching some of them. Zynga. Zynga, if I can get the right symbol here, was able to rally today on the Facebook news. Obviously, Facebook and Zynga are closely tied because most, if not all, of Zynga's games are hosted on Facebook platforms, and that's where they get most of their traffic from. But it turns out that while Facebook was able to grow their mobile ad revenue, everything with the Zynga is not right, and it gave back all that rally. If we look on the daily chart, we can get a perspective of that. So it's down back in the $3 area. Not a stock. Sometimes if you buy these low-price stocks on big weakness, you can get some snapbacks. And sorry about the mic. You can get some snapbacks and get some nice percentage moves, but Zynga's not one of them, and I think there's a lot of issues with that company, and like I said, just not one that I would be interested in putting in the drawer or anything like that. But that'll about do it. Right now, everything's very stock specific as we're in earnings season. The market's a little bit lethargic. I think getting a little bit tired heading into the late summer month. Late July, early August, all the way through August, pretty much is often a very slow time in the market. And in general, I think right now less is more. I hate to come in front of the camera and say that because a lot of people say all those types of things, and as a company like T3 Live, we're striving to come out and give you good analysis and give you good ideas, but I think as educators it's our responsibility that when we're not seeing things clearly and we're not seeing huge opportunity, it's our responsibility to come in front of you and tell you, enjoy time at the beach like Scott says, or enjoy time on the mountain like Scott says, but don't overtrade, don't force things because you feel like you have to be sitting in front of your desk, do something else productive with this time and wait for more clear-cut opportunities. This has been your Editor-in-Chief, John Darcy, here for the Daily Recap. We'll see you tomorrow morning for the Relaxed Morning Call.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.